So there's a company in Tokyo sitting underneath something like half of Japan's digital securities market, and its registered head office is inside a WeWork. It's called Progmat, and last month it did something I genuinely didn't expect anyone to try. It took 452 billion yen of live, regulated securities, real buildings, real corporate bonds, real investors holding them, and moved every single one off the private ledger they were built on onto a public blockchain, mid-flight, without pausing a deal. Now, the name is the tell. Progmat is short for Programmable Trust, and the founder has written, publicly, that the T on the end is silent, which sounds like a note about pronunciation. It really isn't. So let's take this apart properly. Quick 30 seconds, then we're straight in. We have a Discord called The Motion Room, and I'd love for you to come make it yours. That's the channel list. Early access, where every video lands before it goes public. Charts and data for the tokenomics and DeFi research. Daily announcements, job openings, hackathons. And every Friday, one newsletter drops in there, every figure traced to a primary source. Links are in the description. Okay, on with it. So, Programmable Trust. In English, that just reads like marketing. But the word doing the work in Japanese is shintaku, saito, which is a legal trust, the thing a trust bank runs. So the name says two things at once. We make confidence programmable, and we make the trust structure programmable. You need both readings to understand why this company exists. And here's what a lot of coverage gets wrong. Progmat is not a blockchain, it's not a bank, and it does not issue anything. It holds no trust license. So when you read that Progmat issued a real estate token, saito, it didn't. A licensed trust bank did on Progmat's rails. And the man behind it is Tatsuya Saito, who joined the trust bank's fintech office back in 2016 as its first dedicated member of staff. Now, the origin runs further back than the story people tell. The bank was already researching digital asset custody and filing patents in 2017, a year before the hack everyone credits for all of this. The name first shows up in print in November 2019, and back then, the tagline wasn't Programmable Trust at all. It was simple, speedy, secure. The platform went live inside the bank in March 2021, and Japan's first public asset-backed security token followed that July. So by the time it was spun out into its own company, this wasn't a startup idea. It had 81.8 billion yen already circulating on it, saito, on day one. Okay, so how do you put a Tokyo office block on a blockchain? Honest answer? You don't. Japanese law will not let the token be the building. So here's what they do instead. You put the building into a trust. A trust bank holds it. And what the trust hands back is a beneficiary right, a legal claim on what that trust earns and what it's worth. That right is a thing you can own and sell, and that is what becomes the token. Now, the law. Japan's Financial Instruments Act, Article 2, Paragraph 2, says that right counts as a security. Fine. But make it transferable electronically. Put it on a ledger, and it gets reclassified as an electronic record transfer right, which drags it up into the heavy disclosure tier built for listed shares, unless it qualifies as an exempted one, in which case it stays light. That single fork decides how nearly every one of these deals gets structured. But here's the elegant part. Why a trust and not just a company? Because only a licensed trust bank gives you insolvency remoteness. The building sits ring-fenced. If the trustee falls over, your asset isn't on their balance sheet. It is not part of the wreckage. That's why Japanese tokenization is built on trusts. And it is exactly why Progmat had to be a separate company from the bank that holds the license. Right, this is the one. 13th of July this year, Progmat's own press release. That's it on screen. They ran a rebuild they called Project Keystone, and it moved the entire platform off Corda 5 onto an Avalanche Layer 1. All of it. 452 billion yen of live deals. And remember, these are regulated securities. Somebody owns them. You are changing the ledger underneath them while the market is open. The mechanism has a name, and it's the bit I'd underline. They introduced a layer they call the mediator, sitting between the business logic and the chain, abstracting the ledger away. So the platform stops being a Corda platform or an Avalanche platform and becomes one that doesn't care. Multi-chain stopped being a slogan and became a component. Underneath, the contracts went from Java on Corda to Solidity on the EVM, with no change in behavior and minimal impact on deals already issued. And there's a quiet commercial win in there. On Corda, every firm using the platform needed its own node. That's gone. Onboarding a new bank got cheaper. They say rights transfers now run 3 to 5 times faster, and I'll flag that's their own internal estimate in their own footnote. Finality is under 2 seconds, and AvaCloud's chief executive Nick Musalem put it about as plainly as you can. Moving 452 billion yen of regulated securities with no impact on issuers is the bar institutional infrastructure has to clear. So does anyone actually use it? This is my favorite page on their whole site because it's just the receipts. Every deal is on there, dated, and it tells you who issued it, how big it was, how much of it was borrowed against, and which broker sold it. And look at who shows up. Mizuho Trust Bank issued a 15.5 billion yen residential deal across 3 Osaka properties. Alterna Trust, a trust company built specifically for digital securities, has issued 3 of the recent ones. Nomura distributed. So did Daiwa, SBI Securities, and Tokai Tokyo. Mizuho Bank and Rizona have both acted as fiscal agent. And here's why that matters. This platform was born inside Mitsubishi UFJ Trust. In Japanese finance, Mitsui, Sumitomo, Mizuho, and Nomura aren't neighbors. They're rival houses. And they're issuing and selling on it anyway. The biggest one on the page is Osaka Dojima Hama. That's office, retail, and hotel stacked into a single tower. 55.8 billion yen of it. 61% of that borrowed, and it was Nomura who sold it. MUFG even put its own 10 billion yen retail subordinated bond through as a token. And the ownership moved the same direction. That founding stake got diluted to just over 42% back in April 2025, in a round that brought in Norinchukin Trust, Aozora Bank, and Kenedix. The consortium around it is 344 companies now, up from 21 in 2019, with 13 public working group reports going back to 2020. One of which, and I love this, was about securitizing aircraft. Okay, now the part that keeps us honest, because none of that means the market works yet. Issuing is not trading. In all of 2025, across the whole of Japan, roughly 3 billion yen of security tokens actually changed hands. That's the start exchange you're looking at, which did about 450 million, plus another 2.5 billion or so over the counter, against a national outstanding balance north of 674 billion yen. Do that division. It's well under 1%. These things get bought and then they sit. And Start itself lists 7 issues and handles real estate only. Its own FAQ still says so. Then the stablecoin. Progmat coin, the platform, is built. The number of stablecoins issued on it is 0. The joint stablecoin from the 3 megabanks was still at governance committee stage in their June announcement. And the utility token line has managed 4 deals in 4 years. And here's where we check homework. Progmat says it holds about 65% of the market by value. The industry association's own published tabulation, same maths, lands at 57. So we'll show you both. And for scale, there's already something like $339 billion of on-chain repo running globally, against a government bond repo market worth around 16 trillion. Japan is early. That's not a criticism, it's just where the clock is. So what's next? 31st of July, 2 weeks before the government bond story everyone covered. Progmat, Kinetix, KDX Partners, and DataChain finished step one of something quietly wild. A real estate security token issued on Avalanche's public C chain using an open standard called CMTAT, which is Swiss, and they settled it, delivery versus payment, against a stablecoin built to Sumitomo Mitsui Financial Group's specification, sitting on a different chain. Issuer, straight to investor, nobody in the middle. So read that back. A Mitsubishi-founded platform, a Swiss contract standard, a Sumitomo Mitsui stablecoin. That is the neutrality bet, showing up in an actual settlement. Honest caveat, printed in their own footnote. Step one ran on test tokens with a prototype wallet. It's a proof, not a product. Step two would add borrowing against your real estate token around the clock, and the decision on whether to commercialize is due before the end of this year. Meanwhile, their developer docs just published the roadmap in the open, version 7.2, shipping the 25th of September, adding tokenized money market funds and better redemption operations. And on AI, let me be straight rather than sell you something. Progmat ships no AI product, none. What exists is the founder's own thesis, written in January, that an agent which never sleeps eventually becomes the counterparty. And for that, you'd need a public chain, a wallet with the agent built in, and exchanges an agent can actually trade on. Now read the migration again. He isn't describing a feature, he's describing why they moved. So where does that leave us? Progmat's bet is that the infrastructure that wins is the infrastructure your competitors are willing to stand on. So it engineered away its own control, kept the legal wrapper the regulator already trusts, and then changed the engine underneath without landing the plane. That's a strange kind of ambition. It's also the kind that ships. And the action item here is free and checkable. Progmat publishes a monthly report on its own numbers. 13 working group reports are sitting there to read right now, and their developer docs tell you the next release and the date, version 7.2, the 25th of September. Put that one in your diary, because a company telling you in advance exactly what it will ship and when, that is the cheapest honesty test there is. And in 6 weeks, you get to check whether they passed it. If you got something out of that, a like genuinely helps it reach the people who'd want it. Subscribe if you want more of these primary sources, no price talk, no hype. Come join us in the Motion Room, links in the description. And if there's a project you want measured, post the name on the request board. And grab the newsletter while you're there. One email every Friday. I'll see you in the next one.